Hello, everyone. This is Jared Lopez at Next Generation Trust Services. I am the Sales and Marketing Coordinator. With me today is Lauren Haeger. He is the Vice President and General Counsel of FNEX. FNEX is a company, and he will be discussing the alternatives market. They are a portal where you can go online to access company information in order to see if you want to invest with them. Currently, only accredited investors can access this portal. And I'm going to be discussing self-directed retirement plan basics. Then Lauren is going to be going a little more in-depth. He's going to be getting a little more specific and discuss his alternatives market. The easiest way to start discussing self-directed retirement plans is understanding what Next Generation Trust Services is. We are a third-party administrator for retirement plans. So you can think of us sort of as a Fidelity or a Charles Schwab or a Merrill Lynch that holds your retirement plan. We do not specifically hold the funds with us. We do have a custodial bank. However, we do the asset reporting for your IRA. So again, we're not a bank. We're not a financial planning service. I have people calling me up every day saying, you know, what's the better real estate market to invest in, or should I invest in precious metals? We can't help you there. Basically, what we're allowed to do is we're allowed to say yes or no, you can or you cannot make this investment within your IRA. We can never endorse, recommend, or sell any products. Even though we are doing this presentation today with Phenix, again, we cannot endorse, recommend, or give any investment advice. We're just offering educational information, and that's what Phenix is doing as well. We also do not review the legitimacy of any investment. We cannot endorse or recommend, again, any products. I cannot say enough how we cannot, really cannot give any investment advice at all. Everything we're doing is for education purposes and strictly education. We're going to be starting today discussing the types of plans that can be self-directed. First is the traditional IRA. Now that is for tax-deferred investing. So basically you will be putting away, the traditional IRA limit that you can put away today is $5,500. You'll be putting that away today into your traditional IRA. That'll be a tax write-off in the current tax year. However, when you are taking the funds out at a later date, presumably at retirement age when you're making less income, that is when you will be paying taxes. So that's tax-deferred investing. The Roth IRA is a wonderful thing. So with the Roth IRA, you will be paying taxes in the current tax year. However, the assets that you purchase and any earnings that you receive within those assets or from those assets is 100% tax-free. So I like to say if I put $5,500 in a Roth IRA this year and I come out and at retirement age and I have $10 million, I made a number of great investments, and also it is 100% tax-free. The SEP IRA is for self-employed individuals. It's the same type of plan as a traditional IRA where it's tax-deferred. However, because you're self-employed, you are entitled to a much higher contribution limit. So as opposed to the traditional IRA where you can only put away $5,500 per year and $1,000 if you're over the age of 50 as a catch-up, with a self-employed plan you can put up to $52,000 in it in this year, or 25% of your salary. So the lower value of $52,000 or 25% of your salary. The simple IRA is for small businesses, And even if you have an employer or a qualified plan, such as a 401k, you can have a portion of that plan be self-directed, or you can self-direct the whole thing. So if you have a 401k and you want a portion of it in real estate, we can hold that asset for you. There are two plans that are not retirement related that you can also invest into these non-traditional assets. A Coverdell is to save for child's education. Now, child education, that doesn't necessarily mean college. It could be for private school, it could be for books, it could be for room and board, anything that has to do with education. The other one is a health savings account. That is a plan that you do need to qualify for. It's only for high deductible plans, and you put that money away for medical expenses. So the great thing with a health savings account is that you put money in, and it's tax deferred, and when you're taking that money out and paying for those medical expenses, you do not need to pay taxes on that. So that is a wonderful, wonderful plan if you do qualify for it. Again, it's only for high deductible plans. There are several options for funding a retirement plan account. First is a contribution. I went over it briefly before, but that is when you deposit new personal funds into your IRA. The traditional and the Roth IRA contribution limit for 2013 is $5,500, and if you're over the age of 50, you can contribute an extra $1,000. The other options you can do a transfer. That's moving between like accounts. So if you have a traditional IRA at Fidelity and you want to move it into your traditional IRA at Next Generation Trust Services, then that would be a transfer. A rollover is when you move between unlike accounts. So if you have an old 401k from a job that you recently left and you want to roll it over into a self-directed IRA here at Next Generation, you can certainly do that, and the process would be a rollover. The conversion is something we're seeing a lot of lately. Now it being December, people are really trying to take advantage of it. And with the economy being so poor, basically people are making less money now. So they're taking their traditional funds, taking a hit on the taxes in this current tax year, so they're converting their traditional IRA into a Roth IRA by paying the taxes this year, just so in the future all of their earnings will be tax-free. So once you do that conversion, the assets that you hold in your retirement plan, as well as the earnings that you receive, will be 100% tax-free. So now we're going to sort of get into the meat of the presentation. We're talking about self-directed retirement plans, and that means non-traditional investing. So outside of stocks, bonds, mutual funds, and CDs, we're talking about everything else. But there are two things that you cannot invest in. You cannot invest in life insurance or collectibles. Collectibles are things like art, wine, stamps, baseball cards, precious metals that are not at spot price, not IRA approved precious metals. You cannot hold them in your retirement plan. We do have a number of clients that actually invest in a company that trades and sells wine. Now, you may think that that's prohibited, but it's not, because our clients actually invest in the company and not the wine itself. So it is an allowable investment. The other thing that you need to worry about when you're dealing with a self-directed IRA is a disqualified person. Now, these people cannot have any interaction or any personal gain from your retirement plan investment. Now, that might sound a little confusing, but I'll break it down for you. So if you have a piece of real estate in your retirement plan. These people, the IRA holder, the IRA holder's spouse, any ascendants, so parents, grandparents, any descendants, children, grandchildren, and the descendant spouses are all disqualified. So if you have a property in your retirement plan, none of those people can live in the property. None of those people can do any work on the property. So your father's contracting company cannot do any work on the company. You and your spouse cannot live in your retirement plan held home. If your parents have money put away in an IRA and they want to invest in your startup company, and you're their son or daughter, they cannot do that. You will, however, notice that horizontally on the family line, brothers, sisters, cousins, aunts, uncles are all not listed there. So even though your parents couldn't invest in your startup company, your uncle could, your aunt could. An old employee here actually had a retirement plan where she lent money out to her brother. Brother is not listed on the list of disqualified persons, so that was absolutely an allowable investment. It does need to be at a fair market rate, however. So now we're going to get into the possible IRA investments, and that's everything else. Literally anything that you can think of that's not life insurance or collectibles that can be an investment can be held in your retirement plan. So again, the big one that we have here is real estate, and real estate's a very broad term. So mortgage notes, tax liens, physical properties. You can invest in properties worldwide. It doesn't need to be in the United States. Hedge funds, private stock, precious metals is another big one. Loans. If you want to loan money out to a friend, you can do that using a self-directed IRA. Some of the more famous ones around the office, a woman actually invested in teak and mahogany trees in Costa Rica. So what she did was she purchased seeds to these mahogany trees in Costa Rica, as well as a 15-year contract. So when the trees are fully grown, cut up, sold, and made into our furniture, that's when she'll see a return on her investment. Somebody actually owns a television station in Tel Aviv. That's another fun one that we have in the office. But again, the most popular investments do involve real estate, whether it's owning the property outright or investing in a company that invests in real estate and you make a solid return. But those anything that you want to do within your self-directed IRA, you certainly can. What I'm going to do now is I'm going to give you my contact information. You can call the office at 973-533-1880, or you can email info, that's INFO, at nextgenerationtrust.com. I'm going to be looking at the questions in the chat box, and I'm going to be passing this presentation over to Lauren Haeger of Phenix, and he's going to be discussing the alternatives market.
Hi, everyone. I guess we're, once it switches over to me, I will lead you through a quick PowerPoint presentation to give you an overview of, one second. Okay, great. Hopefully everyone can see my screen right now. As I said, I am going to lead you through a conversation about generally the alternatives market, the private securities market, and how Phenix can help you navigate this area of investment. So we'll be covering the landscape of the alternative market, what it means to be an accredited investor, see if you qualify for participation, and then general solicitation, Jobs Act, and crowdfunding, some recent changes that have occurred through the SEC, challenges faced by alternatives investors, and ways to participate in this market. Okay. I'm Lauren Haeger. I'm Vice President and General Counsel at FNEX. I have experience in private equity and venture capital. In fact, I was with a small private equity group for a number of years prior to working to build Phenix over the last 2 years or so. And I'm an attorney and as well as an investment banker. So before we go into it, I just want to echo what Jared has said. We do not do any recommendations on securities. We do not endorse any particular investment, and anything I say today should not be construed as an offer to invest or an offer to sell any particular security. Okay, I got my lawyer part out of the way. Let's dig into it. So, a lot of people don't know the actual size of the private investment market, the capital markets market. About 1.2 trillion is was invested into public equities last year. So obviously a large amount, but that amount is dwarfed by the amount that was allocated into private investment vehicles. 1.7 trillion. That's a huge sum of money. That includes the amount that has gone into startup companies, growth capital into private companies, allocations to the hedge funds, to the managed futures accounts, all kinds of different vehicles. Private capital markets is huge, and we'll go into this, but it's really interesting. In the past, it's been 99% large institutions that played in this market, but as you'll see, there's an opportunity for individual investors to participate and hopefully seek out higher returns than they would through public equities and mutual funds. Okay, so what does it mean to be an accredited investor? So to currently participate in the private capital markets, you do have to be an accredited investor. So that means that for the last 2 years, you had income of above $200,000 per year, and you anticipate having an income of above $200,000 this year, or $300,000 for a married couple. Or you have a net worth exceeding $1 million, excluding your primary residence. So there's been a couple of changes in this legislation in the last few years, these regulations. It used to be that you could count your primary residence towards that $1 million. That has changed. So it does have to be an amount above $1 million, excluding your primary residence. Now, just to be clear, the fact that you're an accredited investor does not necessarily mean that you are suitable for any particular investment, nor does it mean that you do have the capability to invest in all private offerings. So, many hedge funds will have a minimum investment well over $1 million. If you only have $1 million in net worth, then obviously you cannot participate in that. So why haven't accredited investors participated in this market previously? And there's a lot of different reasons. Groups that conduct private offerings do not have an efficient means to market or sell products, and this includes hedge fund managers and investment bankers. So in the past, there was no means to broadly disseminate private offerings. Groups had to have a prior existing relationship with an individual investor or even an institutional investor prior to showing them any deal information. So that meant that when a banker or a hedge fund manager decided to take on a capital raise, that meant that they called through their present Rolodex and offered it to the people that they already knew, and that's all that they could do. And so it's been a manual process since the beginning of time, and it's lengthy, it's difficult, and it's expensive. And so in the last few years, less than 3% of accredited investors have participated in private offerings. So that means 97% of people that can participate in this marketplace have not for various reasons. Okay, so big change this past year. As you may have heard, Congress, in a rare bout of bipartisanship, passed a block of legislation called the Jobs Act. Jobs Act did many things. It made it easier to bring a company public. It's created a new category of investing called crowdfunding. And what's most interesting to me and most people in the investment banking community is it lifted the ban on what's called general solicitation. So general solicitation means marketing private offerings. Now this means anything from picking up a phone and calling people to putting a billboard up for a hedge fund. So for the last 80 years, this has been strictly forbidden. You could only, as I mentioned, talk to individuals that you had a prior relationship with, and there's no means to advertise anything that was a private offering. So who can participate in this? These offerings are still only available to accredited investors and institutions, and then the investors must be verified as accredited or institutional. So in the past, there simply had to be a document executed by an accredited investor stating that they were, in fact, accredited. Now, with general solicitation, and this only counts for the general solicitation offerings, there has to be a verification process. And so this can be as simple as a letter from a third-party professional, such as an accountant or attorney that has personal knowledge of the net worth of the investor, or it can be submitted financial statements from a brokerage house or a bank account or tax returns. There's many different ways to get to that. Okay, so who's taking advantage of these rules? So far, not very many people. It's been just a couple of months since these rules were promulgated, and so far, a number of startups have taken advantage of this, but it's been slow going so far. We anticipate that in future years this is going to become commonplace, but it's going to be a while before the industry really figures out how to effectively use general solicitation for private offerings. Okay. So crowdfunding, I touched on this before, but bears going into it with a little bit more depth. So crowdfunding is basically private offerings that are available to non-accredited investors. So if you have a net worth of less than $1 million or you don't meet the income guidelines, you can still participate in crowdfunding. Now crowdfunding is done typically for startup companies or local companies that are not looking to scale their operations. You can only raise up to $1 million in any one year. And the amounts that can be invested are relatively low. So it's a different structure. There's quite a few groups out there that are preparing to do these type of raises. It hasn't happened yet, and the rules were just released about a month ago, so we're looking at a couple of months before they are in effect. So it may be an interesting offering for individuals that are looking to invest in local businesses, and maybe an interesting way for some companies to raise capital and bring in smaller investors that can evangelize the product or the restaurant or whatever have you that they're investing in. So that's not a focus for us at FNEX. We are not participating in the crowdfunding market, but it is an interesting new way to raise capital and maybe of interest to individuals in self-directed IRAs. So from the company's perspective, as I mentioned, it's a new way to source capital. This does have the possibility to create jobs. The negatives here, which should be relatively self-explanatory. There's a high carrying cost for having a lot of shareholders. and there are some reporting fees. In fact, groups that conduct crowdfunding often have to file audited financial statements yearly, which can be very expensive for a small business. So from the investor's perspective, there's possibility for a large upside. And the negatives here really are the same as most private offerings, that there's high risk and low liquidity. Okay, so let's go into where you find these things. Broadly speaking, you can divide private offerings into a couple of different buckets. Primary issuance is what we deal with at FNEX. These are new securities offered by investment banks and hedge fund managers. Typically what we see is growth capital opportunities, which means that it's a company that has been operating, has revenue, and has an opportunity to scale their offering and, of course, create more revenue in the process. And so these are various risk profiles from quite risky to pretty steady businesses that just need money to scale. Typically, these have long lockup periods, which makes them well-suited towards self-directed IRA vehicles. So this means that you're going to have your capital locked up in these investments for a long period of time. And there is low liquidity. These are not publicly traded. These are often privately traded. But you're looking for a return on your investment either from an exit, sale of the business, or a share of the profits from the company. Okay, so that's primary issuance. Secondary issuance, this is when you trade private securities. This is an area that has seen a lot of growth in the last 5 to 6 years. Specifically, companies like Facebook and Twitter had an active secondary market prior to going public. So companies such as Second Market and SharesPost gained a lot of press and notoriety because of this active market in private offerings. It's an interesting way to participate in rapidly growing startups. It's still, in the grand scheme of things, very much a niche industry, and typically companies or groups that are participating in the secondary market are doing so at a relatively large amount of capital. And third, funds are a very common way to participate in this market. Now this includes hedge funds and managed futures accounts and private equity funds and venture capital funds, all different types of investment strategies that can operate at a lower operational amount than a mutual fund, and hopefully can return higher alpha than you'd expect from a widely available mutual fund. So sources there, some RIAs offer entrance into hedge funds and managed futures funds. You can contact some investment banks that best these type of offerings, and they are available on Phenix. Okay, so who do you work with to find these? As I say here, if you're working with an RIA or a private banker or a broker, contact them and ask them what they have available. Oftentimes you'll be surprised. Some large RIA shops have access to a large deck of hedge funds and managed futures accounts and various private offerings that may meet your investment criteria. Or if you are doing your own investigation, you can look at sites like Phenix or various alternative asset providers and conduct the diligence on your own and source potential offerings that way. Okay, so what do we do? So Phenix is the first comprehensive alternative investment sourcing platform. We are built specifically for accredited investors. We do not do crowdfunding. We only have offerings that are available to people that meet the accreditation standards. So we have a wide range of potential offerings. We have direct placements into private companies. We have access to hedge funds and other private investment funds, as well as a wide range of managed futures funds. I encourage everyone on this phone call to check out Phenix after this webinar. It's very simple to sign up. You can sign up with some basic biographic information, and then you can certify yourself as an accredited investor and then start seeing offerings. So once, as I said, once you have self-accredited, you can see information related to the deals on the platform. And so you can go through and you can sort by who's offering it. So we have multiple investment banks that we work with, and you can search there. Search by description, amount being raised, minimum investment, and what the pre-money valuation is. Okay, the searches can be saved. So if you're only interested in, let's say, biotech deals in the Northeast, then you can save a search there, and it creates an email notification or a text notification when offerings that meet those criteria are added to the platform. So this is a really easy way for individuals that are, have specific industry knowledge and want to participate in offerings that they understand to source deals in a passive manner from the platform. Okay, so once you get to the deal page, you can see quite a bit of information about the offering. You can see a quick snapshot of what the offering is, how much is being raised. You can see a video or sometimes a PowerPoint presentation with information about the company, as well as biographical information about the principals. So once you have looked at an offering and determined that you do have interest, you can go into the deal room and request more information about the offering that may be confidential and may lead you to discovering more reasons to invest or not to invest. So prior to entering that deal room, we do gather more information about you, and this is really the beginning of the suitability process for investment banks that are conducting offerings. So upon completion of this information, we give it to the banker that's running the offering, and they make the determination whether you are capable of participating in the offering, and then they can follow up and give you more information about the company. So as I mentioned, we have the deal room for dissemination of the additional information, and we use it for actually closing the transaction as well. So we have the capability for you to use this as an ongoing resource for information about the offering. So once you have closed the transaction, you have executed placement documents, you can upload them here and save them for tax purposes and just organizational purposes for investments that you conduct through the platform. Once you are ready to invest, we do that in a number of different ways. You can do it through your custodian account and with your self-directed IRA partner. You can simply wire the transaction to the account as indicated by the investment bank or cut a check, or we do have a means to do it through the platform through a company called Voila. That's pretty much it. I'm available for questions here. As I said, please go to FNEX.com and check it out. It's pretty self-explanatory, and for those of you that are accredited investors, this is a free and easy way for you to source various alternative investments that may be well situated to your investment strategy. Thank you.
All right, thank you, Lauren. That was very informational. I do have a couple of questions that come in, and if you do have any questions for Lauren or for myself, please ask them now. You can send it into the questions tab or the chat tab. Either one will work. The first question, Lauren, and I'm sure you expected this, what updates do you see in the Jobs Act that's, I guess coming forward or going forward? What do you see coming from the Jobs Act?
Yep. So great question. So Well, the short answer is not much at this point. So we have the crowdfunding regulations, and that was really the last piece of the puzzle. And so those were promulgated just before Halloween, and there's a 90-day window for there to be public comment, and then those are actually activated. So we're looking at actually crowdfunding existing sometime towards the first quarter of 2014. Now, it's going to be interesting to see how that rolls out. There's some additional hurdles there. Companies have to be they have to file as portals and go through a FINRA process, which I'm not going to get into here because it's confusing and not very helpful to most investors. But suffice to say, we're a couple of months away from crowdfunding being in effect. And at this point, we have seen all the regulations from the Jobs Act put forward by the SEC. Now, there's quite a bit of industry gossip, if you will, about what's going to happen in the future regarding these type of regulations. And there's a lot of buzz around the idea of pushing up the limit for crowdfunding from $1 million to $5 million. Now, I think that would make a sea change in how these things are done. $1 million for a growing company it's helpful, but for rapidly scaling tech companies, it's quite often not enough. $5 million, on the other hand, is a fair amount of capital. It can help a lot of companies grow. So, we'll see what happens with that. As I mentioned, this is a area that there is bipartisan agreement on. So it is one that, Congress is pretty slow on passing things, but they seem to they have gotten this done pretty well. So there may be some future movements on that front.
Okay, great. Another question came in is, I guess, how would you use a self-directed IRA within this? So the first thing you would do is you would, as of right now, need to be an accredited investor and sign up with Phenix. That doesn't, you don't need to register using your retirement plan's name or anything like that. You just sign in on your own if you are an accredited investor right now, obviously. Once you do find an investment that you are looking for on Phenix, you find that perfect investment, that's when you will contact Next Generation and say, I want my retirement plan to invest in this company that I found through Phenix. And then we'll go about either setting up your account. Hopefully you have your account set up so you can jump on that investment. Or we can certainly, set up your account then and make the investment for you. Do you have anything to add to that, Lauren?
Yeah, I think that's pretty straightforward. So, we're going to be, at your service through that process. And, one of the things that Phenix really makes easy from the participation in the self-directed IRA front is that we do gather most of the documentation necessary for authorization for investment and for actually executing the transaction. So we'll gather the PPM and we'll have all the necessary tax information related to the companies, and we'll try to make it as easy on you and your provider as possible.
Okay, we'll give another minute to see if there are any questions. While we're waiting, I just wanted to let you know that you can contact me again. I'm going to give you my contact information. My name's Jared Lopez. You can contact the office at 973-533-1880 or email me at jaredl@nextgenerationtrust.com.
And you can feel free to contact us at info@phenix.com.
All right. It doesn't look like we have any more questions. Thanks everyone for attending, and We'll be in touch. Thank you so much.